Go ahead and see what is going on here. But anyways, this is StockerFinance. Welcome to the live stream. Today we are experiencing a minor market correction throughout most segments of the market here. As you can see, the largest segment of the market that's experiencing this correction is the technology sector, which is no surprise since that is the most volatile sector out of all of these segments here. Communication services is also hurting, as well as consumer cyclical, with Amazon down about 2.23% today. Consumer defense also slightly hurting, industrials and basic materials as well. Basic materials is actually hurting quite a bit here. The healthcare and energy sectors remain somewhat stable, however. Let's go ahead and check out the Dow Jones here. So the Dow Jones is down about 1.65% over the past 5 days. However, it's down about 1.6% over its high in the past month here. It's down a whopping 3.16%. And over the past 6 months, however, in the past year, you'll see it's a much different story with the Dow Jones having recovered from the market crash back in March of 2020. It's up 41% now. It's been about a year since that recession started, which was one of the shortest recessions in all of United States history. If we go look at the S&P 500, it's a very similar story, down about 1.8% today. So we're not experiencing, a Black Monday type of deal or anything like that, or whatever is called a Death Tuesday or Thursday or whatever they made for the old March crash a while ago. But overall, the S&P 500 over the past year, you'll see it's a much different story here. The S&P 500 has recovered 44% since the March crash. If you look at the Nasdaq, it's another similar story here over the past year. It has recovered since that March crash in 2020 over 45%. Today, it's down about 2.5%, and that's mainly due to the Nasdaq composite as well, or mainly the Nasdaq being made up of lots of tech stocks, which are currently taking a major hit. As you can tell here, Microsoft down 3%, Apple down 2.7%, Nvidia down around 4%. If we look at the semiconductor industry, it is hurting pretty bad. AMD are down about, about 3% as well just today. Go ahead and take a look here. Tesla stock, I know it's a very popular one for a lot of people here. Over the past month, Tesla's experienced a decline of 22%. Over the past 6 months, if we look at its high during its 6 months, it's down about 20 or 32%, significantly down from its high of $900 per share, but up from its 52-week low of $152 per share. AMD, another popular stock, down about 3% today. Microsoft down about 3% today. And even Disney is down around 2% today. Over the past about the past month, it's down about 4%. The reason I'm looking at all these stocks here is because these are stocks that have historically, over the past few months, in my opinion, performed very well. Their fundamentals are relatively healthy in their earnings, except for Disney, which reports its earnings tomorrow after hours. They've all been performing quite well. Now let's figure out what's going on here. Why is the market experiencing this sorts of crash? You've probably heard a bunch of different stuff. There's lots of news going on, and people are, in my opinion, making it out to be a much bigger deal than what it actually seems. But there are some factors, especially some larger economic factors, that we really need to take into account here. And so the first thing I want to talk about is inflation, because inflation has been speeding up pretty rapidly. In fact, we've actually starting to see levels of inflation. If we go ahead and look at the core inflation level here, and let's just look at the max chart here. You can see that since about, or let's look at the 25-year. It'll be a little easier here. Inflation, it's actually over 4% now. It's reached over the 2008 levels. Now that's a serious worry, because as inflation rises, it affects the overall economy, especially as consumer prices start to rapidly increase. And what you're going to see here, if we take a look at the CNBC article, they outlined it very well here, which some percentages. I thought this was just a well-written article here. Well, the consumer price index, that measures and I'm just going to go ahead and highlight it for you guys to read here. Let me do that. There we go. So the consumer price index, which measures a basket of goods, as well as the energy and housing cost, that rose 4.2% from a year earlier. And the Dow Jones had an expected 3.6%. It actually rose more than the Dow Jones survey. But the more worrying part, besides that to me, is how significant we see energy prices rising, as well as we see used car and truck prices. Now, most people would hear, okay, used car and truck prices. What does used car and truck prices have to do with the stock market at all? That seems like a completely different market compared to what we're talking about right now. But it's important because that's a key inflation indicator. I mean, it surged 21%. If you go out on Facebook Marketplace or Craigslist right now, you'll see that used trucks are going for crazy amounts. I just bought a truck for about $16,000. It's a used truck. And it's already up. I've owned it for less than a month now. The value of that vehicle, I could sell it and make an extra $2,000 just in a month. That's showing you how rapid inflation is rising right now, especially in these type of segments. You're seeing it in wood as well. So on top of that, besides inflation here, which you just briefly touched on here, there's also the tax day. And tax day actually got extended to May 17th. Now, what does this have to do with the stock market crash and the stock market sell-off overall? Well, what it really means, and let me move this around here. There we go. Okay, that's a little better. You can see it a little better now. Let me just put that back up. Sweet. So tax day right now, what that means is that people are actually selling off their stocks and taking the depreciation, and they're getting a tax write-off. And because that date extended to May 17th, we're going to continue to see that. And with Biden's new capital gains tax, it actually hurt some of the larger investors more. I know for smaller investors, people with smaller amounts, it may have helped them significantly, especially more longer-term investors. But for, let's say, older people who have significant amount of money invested into the stock market, they're going to want to sell off a lot of that for simply just tax purposes. And because that date's been extended through March or May 17th now, that means we're going to see more of that continuing over the next 5 days. So yeah, I mean, this is definitely part of the reason we're seeing this market sell off over the past few weeks, as well as probably going into next week as well. I would expect it to continue on. Now, does this mean we're heading into a recession? Well, we'll talk about that in a bit here, but I don't believe so at all. We have seen a lot of, let's say, fear-mongering videos out there saying, oh, we're going to see a massive correction or a massive drop in the stock market coming soon. I'm not really, I don't believe that. Perhaps you guys have better opinions, but in my opinion, that is not what's happening right now. It's just simply a tax sell-off, as well as we're also seeing some inflation result. And inflation is the more worrying. Now, we also have war in Israel or some stuff going on in here. I'm not going to get too into this since I know it's a really hot topic right now, but this does have a little bit to do with shaking the markets up, at least on a geopolitical scale. And the lumber prices as well are skyrocketing, which is more, it just proves the inflation issue overall. And inflation is one of the largest issues right now in the United States. I mean, hyperinflation is, you've seen what it's done to places like Venezuela and other countries around the world, which has completely destroyed their economy. So we have to be very careful with how we tread with inflation. Now, I know the Fed had recently stated, oh, we expect it by next year, the Fed rate to drop, or not the Fed rate, but we expect inflation to drop to about 2%. Right now it's at about 4.2%. So cutting that inflation in half would be very nice. Yeah, anyways, let's go ahead and move on here and talk about some other reasons. So one second, I just want to quickly go over past recessions because, again, there's a lot of fear-mongering going on in the stock market world, especially with a lot of YouTubers right now saying, oh, everything's going to hell. They have, their thumbnail with a bunch of fire in the background because everything seems to be burning and falling apart. That's not the case at all. There has never been another recession back-to-back in this short amount of time. One we had in 2020. I do not expect one for at least another 2 years at a minimum. If we look at the shortest economic expansion in history, the shortest expansion period from the mid-1940s until 2007, that lasted 24 months. That's still 2 years. It's only been a year or less than a year since the last recession. And a recession is defined, just to give you guys a broad definition of it, it's defined as a period of temporary economic decline during which trade and industrial activity are reduced. And it's specifically identified by a fall in GDP in 2 successive quarters. Now let's go ahead and take a look at the gross domestic product in the United States right now. And the reason I want to look at this here is because what you're going to notice is we had a successive drop in Q1 and Q2 of 2020. But then what happened, let me make sure this doesn't get cut off for you guys on the screen here. I apologize for that. But over the past 3 quarters, we've seen a massive rise in GDP. So as GDP continues to rise and continues to increase, we see Q3 of 2020, a massive increase. We recovered nearly, we increased almost 35% in GDP that quarter. Then in Q4, we have about a 5%, and now we have just about, about a 7% increase in Q1 of 2021. And I expect GDP to continue to open. And the reason for that is because I see GDP continuing to increase over time is due to the reopening plans throughout much of the United States. Here's the states that plan to fully reopen. So for currently, we have, the majority of states in the United States, especially big ones who have a high population and are very dense states, such as Texas, Florida. We also have Nevada as well, with Las Vegas specifically. Those are, and we have, ones that are planned for June or later. We have California here, and that's probably debatable, to be honest here. And ones who have no criteria date, but are relatively open. We also have Wyoming and Colorado and Kentucky as well. So again, in terms of the overall United States situation, I expect GDP to continue to increase. And it's a great sign that we will not be heading into a significant crash or another recession as well, at least in the near future. You also see the mask mandates as well, which gives us a better idea of what's to come for the United States. And vaccines are going out very rapidly. Now let's take a look at the effective federal funds rate, because this is really important. And what happens when you have a low effective federal funds rate? As you can see here, it's close to zero right now in the United States. And because of that, you're going to see increased consumer spending, and it's going to help stimulate the economy. And they have no plans to increase the federal funds rate through 2022 and even through possibly 2023, which will help stimulate the economy. But again, the big worry that we have right now is recession. And the other, or not recession, sorry, is inflation. And the other thing that I want to touch on here is the employment situation. The employment situation, which will drastically affect the overall economy as well as it'll affect the GDP going into the future. And again, recession is defined by a drop in GDP in 2 successive quarters. However, if we look at GDP, as we just looked at, we're seeing an increase in GDP over the past 3 quarters, and I expect that to continue on, especially since unemployment right here, and I'm looking at the BLS.gov site just to give us the employment situation. Right now, it's only updated till April 21st. We'll get another update on May 21st, so this month on the 21st. But you can see that the unemployment rate is drastically falling, although it has started to level off around the 6% range, which is definitely still alarming. I would like this to continue to drop without me. Otherwise, I'm going to start getting a little more worried. But again, I'm not seeing any drastic measures going into the future except for the inflation situation, which according to the Fed and according to numerous people is going to continue to flatten out and drop down to about the 2% level in the next year. Now, oh, my bad there. Where was I? Here we go. Let's head back here, though, because I just really want to, touch on some more of this inflation issue. So we have the inflation at about 3% right now, and we have the tax day as well. Just to go over a summary, we have some geopolitical issues. We have lumber and used car prices continuing to increase, and those are definitely the most worrying situations right now. But in terms of the stocks, if we go ahead and look at the stocks that I'm following, especially just the overall tech stocks here, if we just look at the map here, there's a lot of opportunity that this correction is creating. You have stocks that really have great fundamentals. Microsoft, they had a great earnings report. AMD, a beautiful earnings report. They raised their guidance for the year. They're merging with Xilinx Corporation, which will raise their bottom line. You also have companies like Tesla, ironically down 4.2% today. Tesla, and going into the future, I see a very positive outlook with them. Whether you disagree with me or not on these specific stocks is okay. On top of that, Apple as well. So if anything, do I think a major recession or a major correction is coming in the future? No, personally, I do not. I think it's way too soon for that to happen. Now, the housing market is a different situation. The housing market, we could definitely see some sort of housing crash in about, I would say, Q1 of 2022 or Q4 of this year, so Q4 of 2021. The reason for that is simply due to housing supply. It's also due to the unemployment rate not declining fast enough. And that could definitely create maybe a minor correction in the stock market. But related to what most people are invested in, at least watching this most likely, a lot of the YouTube investors especially, who are mainly heavily focused in the technology sector, that's not going to be as affected as you might by, let's say, basic materials and industrials. So in financials as well. So in my opinion, the overall stock market, yes, we're experiencing a minor, I guess I don't even want to call it really a correction. A minor correction, I guess I'll just say that word, over the past week, possibly going into next week, primarily due to the tax season. And that's because the tax day got extended to May 17th. So people are really trying to get all their tax write-offs, trying to get that situated. And that's a normal thing that happens every year. It's a very seasonal thing. Is it extremely worrying? No. I think the fear-mongering is blown out of proportion for this situation. And maybe I'm wrong. Maybe other people are right. But personally, I'm going off the numbers. I'm going off the data. We see vaccines going out. We see the overall federal funds rate remaining near zero, which is going to stimulate the economy. We see a rise in GDP over the past 3 quarters. And on top of that, we have stocks with great fundamentals. And yes, some of these, they may have been a little overvalued. I would say, especially in the tech sector, experiencing some overvaluation, which is causing some issues. And I would say, but due to the volatility of the tech sector as well, we're going to see a more drastic decline. That's why we're seeing, Tesla down 30% over the past couple weeks. Microsoft is down as well, despite a great quarter. AMD down about 20% over the past couple weeks, despite an excellent quarterly earnings as well. So a lot of people, this might not make much sense. But a lot of it just has to do with the rapid volatility in the market and to people being significantly over leveraged right now with the easy access to margin, especially to retail investors now with Robinhood and other brokerages as well. So just to summarize this, I'm going to end the live stream soon. This is mainly just kind of a short live stream for me to test out how this format works for my channel. I do really enjoy the live stream, though. It's pretty fun, actually, just to kind of go off the cusp, even if I might stumble on my words a little bit then and there. But anyways, just to summarize here, there's a lot of fear-mongering going on, and do I think a major recession is coming in the future? No. Again, if we go ahead and just touch on this, I'm just going to reiterate this. We have never had a recession. We have never had a recession less than 24 months apart. So that means for the next recession, unless there was some weird anomaly, there's no way another recession is going to happen within, I would say, the next year. Maybe the next 3 years something could happen, but I do suspect something to happen within the housing market. And that's simply due to the ridiculous supply and increase in housing supplies, housing prices right now. If any amount of supply starts to come back to the housing market, what's going to happen is that's going to cause a drastic reduction in prices in the housing market. And I could see that happening next year. But the correlation between the housing market and the stock market in today's current economic situation, I don't see it affecting, especially the tech sector. I don't see it affecting the stock market as drastically as it did in the 2008 crisis. And I also don't see the housing correction that's definitely going to happen within, I would say, the next year or two, affecting the stock market or being nearly as bad as it was in 2008. I would expect maybe a 20% decline in housing prices, but definitely not the one that we experienced in 2008, just due to the situation's completely different this time around. So anyways, over the next few years, are we going to see a near-term recession or near-term major market crash? No, I don't think so. Again, this primarily has to do with the tax season. This happens every year. It's a seasonal thing. And people who are new to investing and new to the stock market just don't realize that there is, seasonality to the stock market world. And this is a regular occurrence. So we have the tax extension to May 17th. On top of that, we just have an overall broad market sell-off due to some geopolitical factors. And we also just have the fear-mongering going on. But overall, if we just look at the numbers, we see GDP increasing, we see employment continuing to decrease, the effective federal funds rate remains at 0. We do have inflation, which is a serious issue that needs to be solved, and that's not, if we don't see an update on the inflation situation, if it continues to rapidly increase over the next, let's say, month or two, that's going to be way more worrying for me. But according to the Fed, according to the chairman, who, I don't know how much we should trust all those people, but according to according to some individuals, we do expect inflation to go back to somewhat healthy levels around the 2% range by the end of this year and next year, which will put us in a much better economic situation. So yeah, anyways, guys, I hope you enjoyed this live stream. If you're just tuning in now, or just about kind of to wrap it up here, I'm going to publish this as a video, though, so if you want to go ahead and rewatch it, you definitely can. Make sure to subscribe for sure. I don't do live streams that often, but this is a great test. And I hope everyone enjoys this video. If you're watching this in the video format, definitely drop a like, subscribe. I'll have more of these, especially I'm going to be live streaming. I believe the Disney earnings are tomorrow after hours, so I'll do a live stream for that. So that's going to be very exciting, especially after the Netflix earnings that just happened, which were very questionable. I want to see how that reflects when Disney has its earnings tomorrow as well. So anyways, guys, this is StockerFinance. I'm your host, David Scheuer, and I'll see you guys in the next live stream or the next video if you're watching in that format. Please subscribe, and there's also going to be a newsletter. You can subscribe to my once per month newsletter. The link is on my Twitter, or I'll drop it in the pinned comment below. Anyways, thanks for watching. I'll see you in the next video. Peace out.